Hey everybody, welcome to this webinar on 3D-Secure. We're going to wait a few minutes until we kind of reach quorum here and give people a couple of minutes to arrive, but in the meantime, feel free to just post in chat about who you are and where you're calling in from.
Hopefully quite a few people from Cape Town and Joburg, South Africa.
Hopefully. Big metropolis there.
Better weather than you having, I think.
Definitely, yeah. I'm in New York, so today's not too bad, just above freezing. Got Marbella, more sunshine.
I think it's about just below boiling here in Cape Town.
Yeah, I guess you've winter the other time of the year, the opposite side of the year as well.
Yeah, exactly.
Got Hungary here as well. London. Pretty global crowd. Thanks everybody dialing in late in their afternoon. Amsterdam. Hey Amir. Hey Grace, Dallas, Texas. Hope you're all excited to learn about 3D-Secure. It's not the most glamorous topic, but hopefully it'll be interesting to people. I'm glad you're excited, Marius. Hey Vahe. Cool. I think we're almost ready to kick things off. So yeah, as a quick introduction, my name is Shane Curran. I'm the founder of a company called Evervault. We build infrastructure for companies to collect, process, and share credit card details without the compliance headache, and then also allowing them to optimize your payments using things like 3D-Secure, network tokens, account updater, and so on. And I'm joined by Josh Gordon from Stitch, so I'll let you introduce yourself.
Hi everyone, I'm Josh. I'm the product manager for card processing at Stitch. Stitch is a PSP in South Africa. We process payments for enterprise clients, so the biggest merchants in South Africa, offering kind of a few different rails: card, pay by bank, debit, check, cash. Yeah, so one-stop shop for payments in South Africa.
Cool. And the reason we wanted to organize this webinar is that there's a bunch of content online about how great 3D-Secure is, and I guess in a lot of countries as well, people are mandated to do it. But it's pretty hard to get tactical input, especially for large-scale merchants, about how they can optimize 3D-Secure in the sense of making sure they have really good conversion rates, making sure they're minimizing fraud. So we're trying to kind of do a bit of a blend here of technical content as well as some kind of business value content as well, based on what we've seen from merchants that we work with, as well as some of the data from the card networks as well. As we go through the presentation, feel free to throw questions into either the chat or the questions section as well, and we'll have a few minutes of Q&A at the end where we'll try to work through some of the questions. We also have a few engineers from our side here as well that are going to jump in the chat and answer any questions that you might have as we run through it. So to kick us off with an agenda, what we are going to talk about is initially what is 3D-Secure. We'll talk a little bit about the history of 3D-Secure, so a nice little history lesson about why it even exists, how it works, why use it, as well as I think the most interesting section, some gotchas and top tips from what you can't really find online in standard developer documentation or marketing pages, as well as a Q&A for any questions you might have about 3DS or fraud prevention in payments more generally. So to start off with what is 3D-Secure and how it works, the most important distinction to start with is the difference between authentication and authorization. So although they're pretty similar words, they do kind of mean very different things, both in a technical context from a software engineer's perspective, as well as in payments. So payment authentication is basically what you do when you're trying to verify that a particular person that's making a payment, whether online or in person, is the person who owns that card. So it's effectively tying real world identity to the payment credential or a piece of information that they're trying to prove that they own. The way this is kind of distilled in payments is kind of three categories. It's either something they know, so a password or a PIN or something that a user has to memorize. It's something they have, so a phone, a 2FA device like a YubiKey or something similar, or it's something that they are. So fingerprints, maybe retina scans if any of the banks become a bit more advanced over the next few years. But typically this is something like a fingerprint or Face ID on an iPhone or Android device. Payment authorization is a little bit different. So this is the process of verifying that a payment credential is allowed to make a specific payment. So you're checking things like account balance in the case of a debit card, credit limit in the case of a credit card, and then you're looking at other factors as well, like the fraud risk for a particular transaction. Does it look like this person has shopped at this store before? Is a transaction much larger than a purchase that a person would normally make? And the topic of this webinar is 3D-Secure, which is one way, arguably the best way, but we'll get to that in a bit, of performing payment authentication. So we're not going to talk very much about payment authorization here, except in the context of performing 3DS, but it is worth noting that authentication and authorization are totally distinct steps. You can implement authentication only, you can implement authorization only, and in some cases you can implement both at pretty much the same time, but they are two very different systems. So 3D-Secure specifically then is a protocol for card issuers, in other words, issuing banks that a card holder, whether it's a consumer or a business, might be getting their card from, to verify that someone making an online purchase is the genuine card holder. Simplistically, this could be done directly between the card holder and the issuing bank, but in practice, most of the purchases that people are making in a card not present context, so on a website and a mobile app or something similar, it becomes pretty impractical to have the card holder and the bank interact directly. There could be major delays with the user kind of logging into their bank app, explicitly approving a transaction. And then when the user's on the merchant site, they're just going to get hung there until the authentication has happened. So 3D-Secure aims to kind of tie three domains together. And that's where the 3 in 3D-Secure comes from, which is the merchant, or the merchant domain, which is effectively the website or online service that a cardholder is making a purchase on. In 3D-Secure, these companies or these services are using what's called a 3D-Secure server. And we'll get to this in a little bit with some more diagrams that they can either integrate themselves or with a PSP. There's the issuer domain, which is basically the system that the bank runs to make sure that the user is actually authenticating the payment, the card is actually valid, and they're kind of permitted to make the payment under whatever context. And then there's the interoperability domain. So it's a pretty complex term. What this actually means is it's the software that the card networks run to basically write authentication requests between the merchants to the various issuing banks under the hood. This is pretty important. So each of the card networks have all of their own what's called directory servers that are effectively like phone books for writing 3DS authentications. So they abstract away all the complexity of integrating with thousands or tens of thousands of issuing banks, which for a normal business would obviously be majorly impractical. And it's all kind of standardized. So there's this entity called EMVCo, which is effectively kind of a joint venture between all of the major card networks. They govern 3D-Secure, for lack of a better word. So they define the standard, they do certification, and they make sure that everybody is kind of following spec every single time that they're running 3D-Secure, as well as some other kind of parts of the payment stack as well. So they also govern things like point of sale payments, which is originally where the EMV standard came from. Did I do a good job of that, Josh? Am I missing anything about what 3D-Secure actually is?
No, it's not bad. When I found out what 3D-Secure was, kind of these three domains, it really all clicked for me. Like 1.5, 2 years ago, I was trying to figure out what 3DS is, how it worked. I was diving deep into kind of like, Google. I couldn't find anything. And really this kind of idea of, these three domains, an MPI that the merchant kind of interacts with, and this ACS, which is, what the issuer interacts with, and how they communicate with one another, and what each are doing, really kind of made it click.
Yeah, it's worth noting as well that MPI is also another term that people use for 3D-Secure server. So they're both kind of correct. MPI is kind of a longer established term, but sometimes when people are asking about what MPI you use, they actually mean 3D-Secure server and vice versa, which I know is something that we kind of have to explain quite a lot as well. So to give you a bit of history, we're not going to go too much into the past here. And there's a reason this screenshot on the right is very, very pixelated and granulated, because thankfully 3D-Secure 1 doesn't exist anymore. A lot of our experiences in kind of the early 2000s making purchases online were pages like this, where you get redirected to some mysterious Visa bank page where you're asked for your social security number, your national identity number, putting in the expiry date, email addresses, and so on. So this actually originated in 1999, which is pretty early in the context of online payments. And it existed for quite a long time until, thankfully, in 2016, 3D-Secure version 2 came out. 3D-Secure 2 basically modernized 3D-Secure and made it actually usable in the context of a modern merchant site, a modern acquirer, and also a modern cardholder as well, who they're used to neobanks, online banking in general. This is sort of from the Stone Age, the screenshot on the right. And the reason it kind of rose in popularity, it kind of grew a little bit, especially with high risk merchants over the first kind of 10 or I guess nearly even 20 years with 3D-Secure 1. But in 2019, the European Union released new regulation called PSD2, the Payment Service Directive, which included requirements for strong customer authentication. And this is where the terminology of kind of a knowledge proof or kind of an identity proof or whatever on the first slide came from. And as a result, this massively drove adoption for 3D-Secure, especially for European merchants and cardholders. And it kind of brought 3DS into the popular vocabulary, especially in Europe. So up until 2019, 3D-Secure was still a pretty niche thing. For a lot of cardholders outside of Europe, it still is pretty niche, but I think most people, especially in Europe and the UK, are used to being prompted for a challenge or something from their bank.
Yeah, I mean, just kind of on that, like, you use the word challenge there, but it's kind of like interesting. What's happening is when you're doing that 3DS, what the issue is saying is I'm going to challenge this user to prove that they are who they say they are. That's why it's called a challenge in the 3DS world.
Yeah, and it's up to the bank to implement how they want to enforce that challenge as well, which is kind of a nice little bout of creativity for any banks that want to kind of cross the boundaries on what most other banks are doing as well. There's no real standard way of doing that, although it seems that it's mostly revolving around things like push notifications and passcodes now, which is pretty nice. We don't have to worry about doing retina scans or anything just yet. But outside of 3D-Secure, there are a number of other ways that you can implement payment authentication. Some are kind of guaranteed, where the bank is in the loop in 3D-Secure. But other approaches are using things like fraud models. So there's a number of companies out there that are using kind of statistical modeling to see, based on the user's behavior on a website, mouse movements, purchase history, and so on, is this a legitimate user? And they're effectively taking a guess on whether this payment is legitimate. The nice thing about it is that it doesn't implement any friction. With 3D-Secure, and we'll get to this in a couple of minutes on just kind of a visualization on what 3D-Secure looks like. Conversion rate is a big concern that a lot of merchants have. So especially in places like the US or Canada, or just any region where 3DS isn't that common, fraud models are kind of the standard today. The card networks also do have other products out there that let you authenticate a payment in other ways. So Visa, for example, have a service called Account Name Indicator, where ANI, as it's described using an acronym. In this case, you're basically verifying that the name that a user puts in, whether it's part of the billing address or the shipping address or whatever, is the person that actually owns a card for a particular 16-digit PAN. This is also pretty nice because there's no friction from a user's perspective unless they actually get blocked and their payment is rejected. One of the big problems with that is some legitimate purchases will be blocked for kind of valid reasons. If you're making a purchase using your spouse's card, or maybe it's a corporate card and you're making a purchase in your own name or something similar, this can cause some problems as well. But there are other approaches out there. But with 3D-Secure specifically, you can implement it basically two ways. You can do it through a PSP, and most PSPs that are serving either European merchants or cardholders, they just kind of abstract this away from you. A service like Stitch will handle all this for you automatically. It's the same 3D-Secure service under the hood, but the integration is a little bit easier. But if you're a multi-PSP merchant, because you're above a certain scale and you're looking to optimize all your payment processing, handling it through a PSP can be pretty problematic because you end up with pretty fragmented authentication flows and less control over when 3DS is triggered and when it isn't, and so on. So some merchants opt to use 3D-Secure directly, which is sort of the context in which we'll be running through the examples in this webinar, but under the hood, it's actually doing the same thing. So one of the biggest advantages with 3DS is the liability shift. It's easy to talk about it's better from a security perspective or fraud perspective or whatever, but if you're a finance team trying to model what the impact of using 3D-Secure is, the liability shift is a pretty major advantage. So what this means is when a 3D-Secure authentication is performed before the payment authorization, if it's successful, the merchant gets, or the PSP, depending on which way it's configured. They get two values back that are relevant. So the first is another three-letter acronym called ECI, or Electronic Commerce Indicator. This is just a very, very fancy way of saying it's a two-digit number that represents whether 3DS was successful and liability was shifted or it wasn't. So for most of the card networks, this is 05. In some cases, it's 02. But it's just kind of a way harder version to read of, successful or unsuccessful. You also get what's called a UCAF, so a four-letter acronym, but most people tend to refer to this as a cryptogram. So this is basically like a one-time code that's used to verify that the 3DS authentication was successful. And when both of these values are present in payment authorization, so you pass this as part of the payload containing the card, the transaction details, so how much you want to charge, what merchant is making the payment or collecting the payment. If all that is successful, liability for chargebacks is shifted from the merchant, who would normally be on the hook for any chargebacks, whether that's the actual cost of the purchase that has to be refunded to the cardholder, or chargeback fees from the networks themselves, which are generally kind of in the region of 10, 20 euros, dollars, that kind of ballpark. But one thing to flag is that it only applies to fraud reason codes. So when you initiate a chargeback as a cardholder, you specify what reason you're initiating the chargeback for. So the fraud reason codes are generally a group containing reasons like I did not make this payment, or someone stole my card, or something similar. So using 3D-Secure, you can basically shift that liability to the issuer. So you never even see the chargeback, because the issuer will just prevent the chargeback from even being sent to the card networks. But with that being said, liability isn't shifted for other reason codes. So a consumer can still initiate a chargeback for something like merchandise not received. In other words, I didn't receive the product, or the product wasn't as described, or something similar. So it's not a full catch-all for chargebacks, but typically speaking, you'll see a kind of mid double-digit % reduction in chargebacks if you're using 3D-Secure. The figures quoted from the networks are generally kind of 25-30%, thereabouts, which is normally the kind of numbers that certainly we've seen. And I don't know if, Josh, that kind of makes sense from what you've seen as well.
Yeah, I mean, I think a bit lower than that. There are regulated kind of chargeback thresholds that the networks mandate, and if you breach those thresholds, then you kind of go into a remediation plan with the network. So, I think if you are a business who's getting a high degree of chargebacks as a result of fraud, quite quickly you'll be flagged by the networks and go into a remediation plan with your acquirer. I think something interesting that a lot of merchants do to kind of avoid even getting those chargebacks is, like, if a refund is requested or something goes wrong, they just send a refund back to the client quite quickly before chargeback can be initiated.
Yeah, a lot of merchants just don't want to deal with them at all. And as a result, they'd rather just kind of pay it up front so they don't get in trouble with the networks, because, the networks and acquirers can very quickly shut off a merchant account. And it's not a pretty scenario to be in. And on a similar note as well, there's actually certain merchant category codes that are exempted from the liability shift. There's not many of them, but the general categories are kind of online betting or gambling, as well as money orders or money transmissions. So, bookmakers are exempt from the 3D-Secure liability shift, obviously just because they're somewhat high risk. And in a lot of cases, you're kind of charging a card and immediately paying out cash. So, if you're stuck in kind of a chargeback liability world where the issuer is paying out a refund for cash that's already been dispersed, then that could obviously get pretty expensive pretty quickly.
Yeah, maybe just kind of like a note on that. That's obviously largely geographically specific. So in South Africa, for example, MCC code 7995, which is online gaming merchants, do still benefit from liability shift if there is 3DS on the transaction. It has been a point of like contestation at times when we speak to merchants, and it's not immediately clear when the network rule books kind of say one thing and Parcel or Star in South Africa say another thing, as an example. But that is one case where there are differentiating views.
Yeah, and the networks themselves also kind of wield power to just exempt you from the chargeback or the liability shift programs in general. So they tend not to enforce this too often, but to your point, if the chargebacks are extremely high, or if they just don't like your industry, even if there's not an exempted merchant category code on the payment authentication or authorization, they could still in theory shut you off at any time. But for most kind of e-commerce businesses that are selling physical goods, generally you should be good. Obviously, online payments are shifting pretty heavily towards mobile wallets at the moment. For a lot of merchants, especially merchants that are pretty mobile first, whether that's through a mobile app or for whatever reason, their service just tends to be purchased on mobile phones for any reason really. Apple Pay is kind of on the rise, so there's some merchants that are processing 60, 70, even 80% of their payment volume on mobile wallets like Apple Pay. One of the advantages of Apple Pay is that not only is it SCA compliant out of the box, so it does kind of an identity proof based on Face ID or Touch ID, but also chargeback liability is shifted in the same way as it is if you're performing 3DS separately for a purchase or a transaction where a user's typing in their card details. So in a lot of cases, you already get all these advantages out of the box if you're using Apple Pay, which is something that frequently isn't talked about. So you'll still get an ECI value showing that the liability is shifted. You'll get a UCAF or a cryptogram showing that the payment was authenticated, and then in one transaction rather than a user typing in their card details being redirected for 3D-Secure and kind of breaking it into two steps. On Apple Pay, when you just double tap the power button and make a payment, it's authenticated and then sent for authorization as part of the same flow. Google Pay also supports this, but it's a little bit different and a bit more nuanced. So Google Pay is kind of split between the web flow, which is when effectively you add your card to Google Chrome. And then there's the kind of mobile flow where you add your card to your phone. It's embedded in the secure enclave on the phone. And before that happens, your phone is going off to the token services. It's replacing the card number with a network token, and that's stored. So in the mobile flow where you're storing a network token, and that's what's used for the actual payment authorization, liability is shifted in the same way. So it works pretty similarly to Apple Pay. But in the flow where it's on the web, basically Google Pay is just pasting in the PAN into, well, it's not pasting it in, but it's providing the PAN for subsequent payment authorization. So in that case, you do have to perform 3DS as a separate step, even if somebody clicks the Pay with Google Pay button, which is something that very few merchants implement, honestly. Normally it's kind of, they just leave those payments unauthenticated, but you don't get the liability shift with Google Pay on web out of the box, or at least not in all cases.
Yeah, and Shane, maybe just something to say on this. I think, in Europe or internationally outside of South Africa, this idea of an Apple Pay or Google Pay transaction being biometrically authenticated and therefore having liability shift is quite well established. I think an interesting point in the South African market is there is definitely still some degree of confusion in this market whether or not it has been shifted or not. So we have examples of large enterprise merchants who want to use Apple Pay and Google Pay. And then on top of that, for riskier transactions that we flag, do 3DS within the Apple Pay flow. As an example, like with Apple Pay, when you use a Visa card, you get an ECI flag back. When you use a MasterCard card, you don't get an ECI flag back, but there's another field in that message when you're authorizing the payment to indicate that it was biometrically authenticated. And for acquirers or kind of different players in the payment system to kind of get on the same page around, those fields that are indicating it's biometrically authenticated, they aren't all on the same page yet in South Africa. And
is most of that
like,
sorry, I was just going to ask, is most of that pressure coming from the issuers, or is it just kind of merchants or the card networks themselves are enforcing these kind of weird edge cases?
I think it's just hard to say. It's like a regulatory decision that hasn't really been made yet. I think there's like an interesting narrative that exists around interchange. So obviously something we haven't spoken about here, but at least in South Africa, authenticated payments benefit from lower interchange, which means that the acquirer pays less to the issuer for the transaction. It creates quite a weird dynamic with Apple Pay because essentially what it's saying is that if you recognize Apple Pay as an authenticated transaction, the acquirer and the merchant will pay less interchange to the cardholder's bank, the issuing bank. So there's kind of like this push and pull where issuers don't want to recognize it as authenticated potentially, and acquirers do, and you need both of them to agree. That's one narrative. I think more likely they just kind of aren't on the same page from a technical perspective, and the ECI flags aren't flowing through the payment system.
Yeah, it's tough because I'd imagine there's a lot of kind of consumer push for Apple Pay for obvious UX reasons. But yeah, when you've got cardholders fighting against issuing banks, it's always a bit of a struggle. So yeah, going into a bit more detail about the technical implementation of 3D-Secure and how it actually works. 3D-Secure has so many different combinations and permutations that we're not going to go into every single one of them, but to give you a high-level overview of what the flow looks like. Firstly, the user enters their card details on a merchant's website. This flow is assuming that somebody's using an independent 3DS server. In some cases, this is bundled into the PSP's payment authorization endpoints, but the 3DS server sends what's called an AREC, or authentication request, to the card networks. The card networks write it to the issuer, and then the issuer kind of dynamically decides. Well, initially they return what's called a method URL, which is served up to the user's web browser. Fingerprint data is gathered around browser window size, headers, supported languages, and so on. And then the issuers can then make a decision on, will I approve this transaction or authenticate this transaction frictionlessly, in which case the user just redirects, liability is shifted, and the authentication is done, or is it high risk? So I'm going to perform a challenge, either because the purchase is pretty big, so it's a lot of risk to take on. It's a browser the bank hasn't seen the user use before, or sometimes it's just random. You never really know with these things. But if the transaction is challenged, the user's browser redirects, or there could be an iframe or a modal pop-up which shows an authentication page from the bank where it says, you got a push notification, click yes to approve, or enter your PIN, or maybe in some cases using what's called delegated authentication, which is very poorly supported, but is in theory part of the new 3DS spec. You can also use things like passkeys and Touch ID directly on your laptop. But seeing that in the wild is still very, very rare, unfortunately, as nice as it would be from a user experience perspective. A little hidden flow in 3D-Secure that very few people kind of know about is, conceptually 3D-Secure is all about authenticating that the user or the cardholder is present. It's sort of trying to emulate cardholder present payments in a cardholder not present environment, i.e. on the internet. 3D-Secure can actually be performed when the cardholder isn't present. So in a business where you're doing things like recurring payments or maybe split shipments or something similar, where a payment credential is collected and a week later you're actually charging the card. So maybe that's like a hotel or a travel booking site where you're paying out to an airline and a hotel group simultaneously. You can initiate what's called merchant initiated 3D-Secure. Most people tend to call this 3RI, as that's the kind of other three-letter acronym that's included in the spec. But in this case, the merchant can just unilaterally, at any point, request an authentication from the 3DS server. They can pass additional information to improve the likelihood of authentication success, like, was there a previous 3DS authentication that was successful with this merchant? Or maybe it's just a low-risk transaction because it's small. But the card issuer can authenticate the payment and you get the liability shift, even if the cardholder isn't present, which is quite nice. So as a cardholder, generally speaking, you don't know when these merchant-initiated 3D-Secure authentications are happening, but liability is still shifted to the issuing bank. So it works exactly the same way, but the cardholder doesn't need to be present. So yeah, very popular with recurring merchants as well as split shipment use cases as well. And it can be quite nice from a business perspective because you're massively reducing fraud. And the worst case scenario is that the authentication isn't successful. So it's definitely worth attempting wherever possible. And most payment gateways will but you pass in the 3DS data the exact same way as you would with a normal 3DS kind of cardholder initiated challenge or authentication. So to kind of visualize all of that, there was a lot of kind of technical jargon and terminology there, but I've got a couple of videos here just showing what the typical authentication flow looks like. In this case, the transaction got challenged. This is my bank. I got a notification on my phone and I clicked yes to approve the transaction. So in a lot of cases, the implementations are quite poor, where the user gets redirected to a new page or something similar. That's not really a constraint of 3D-Secure itself. In a lot of cases, it's just poorly implemented 3D-Secure servers on either the merchant's part or the payment gateway's part. So the friction isn't as much as people kind of make it out to be. The biggest challenge is if a cardholder hasn't seen it before, they're unlikely to open their banking app because they don't really know what to do. With a neobank or kind of just any modern bank, these flows are generally pretty okay, but as a result, some cardholders get confused, especially in geographies where 3D-Secure isn't as well supported. So that's the challenge flow. We also spoke about the frictionless flow, where authentication is approved with no cardholder involvement. It's just gathering fingerprint data directly from the user's web browser. This one's a lot smoother. So you just enter the card details, click pay and confirm. At this point, the data is being gathered, and then in that entire time frame, the issuing bank was contacted. They looked at the fraud fingerprint and they authenticated the payment as well. So from a payment processing perspective, both of these flows are exactly the same. We'll talk a little bit about the kind of impact that frictionless versus challenge might have on your authorization success rate a bit later, but in a lot of geographies, frictionless is kind of the standard. So in the US, for example, there's one major bank that actually runs 100% of their 3DS authentications through frictionless. You do need to have the card network pop up with the spinner appear for a frictionless flow. So you'll see here for a couple of seconds, it spins, it loads the method URL that I mentioned earlier on, and the fingerprint data is gathered. But yeah, it's not as much friction as I think a lot of people make it out to be, certainly with the new as in 2016 3D-Secure 2. And it's a far cry from the original 3DS one from the late 90s. So on that note, I guess, is 3D-Secure worth the friction? In countries or in geographies like Europe where you have to do 3D-Secure, you don't really have much choice. But if you do have the choice because you're serving geographies like maybe South Africa or the US, Latin America, it is a good question when you should do 3DS and is it worth it at all? The chargeback liability shift is a major component, but sometimes conversion rates can be impacted pretty heavily and it kind of just offsets the entire advantage of 3D-Secure. There's two main advantages to using 3D-Secure, and I think these are the scenarios where it actually does make sense if you don't have to be, or if you're not mandated to do 3D-Secure. So the first is just reduce fraud costs. You're not going to have to pay out as many chargebacks, so you're saving on the card network fees for the chargebacks as well as actually paying out on the chargebacks, which, depending on the geography, the percentage can be pretty material. In some cases, not so much, but 85% of card fraud is card not present fraud, and 3DS pretty much directly mitigates this, at least if the transaction got challenged. One thing to flag is that in October this year, Visa will be significantly increasing what they call the Secure Credential Framework fee, which in the grand scheme of things is still relatively small. So it's 0.025% currently. But the plan, I think, on their side is to increase this pretty significantly. We expect by kind of multiples of the 0.025%. And that applies to transactions that are performed without using 3D-Secure or network tokens. So if you're using network tokens, this doesn't apply, or if you're using 3D-Secure, this also doesn't apply. But for transactions that use neither, it is one extra piece of your acquiring costs that you have to factor in, and especially for kind of high volume, maybe low value merchants, those fees can get quite expensive quite quickly. But then on the kind of, aside from cost savings, there is an upside as well. For merchants that are generally kind of more high risk, whether that's kind of online gaming or just any service that you're not necessarily KYCing a customer because you're not delivering a physical good or something similar, it does mean that you can accept riskier payments because you've offloaded some part of the chargeback risk to the issuing bank. So it means that merchants can accept more payments, and in some cases you can get double-digit percentage uplift on the kind of number of transactions that you're able to authorize. So still pretty advantageous on that side. Any other advantages that I kind of missed? They're the kind of two obvious ones, but I don't know if you've seen anything else at Stitch.
No, I think you got them.
Cool. And then to be a bit more pessimistic about 3DS, there are drawbacks. So you'll see this graph on the right. This is from a Stripe blog post that's really great that they did, I think at some point last year, where they effectively analyzed 3DS performance in the US versus the UK. And in this case, the UK graph is sort of roughly equivalent to the EU, slightly better. But generally speaking, in regions where 3DS is very well supported, authentication and authorization success rates are directly correlated. So basically, the more 3DS that you do, the more likely your payments are to be authorized, which kind of makes sense because the users or the transaction itself has been challenged. So the bank gets more of a guarantee that the person intended to make the payment. In the US, it's not that way. And I'd be curious to hear as well about what it's like in South Africa, but my guess would be that it's something a bit more like the bottom. Sometimes 3DS is a fraud signal in and of itself. So if a transaction is performed frictionlessly and the cardholder hasn't been challenged for a transaction, the issuer doesn't want to take on the chargeback liability, so they're more likely to decline the transaction. And what Stripe found over their data set is that in the US, when frictionless authentication was performed, payment authorization success rates actually dropped by 5%. If the transactions were challenged, they stayed pretty much the same. You would expect actually a slight increase for 3DS challenges because there's more of a kind of low risk guarantee from their side. But yeah, 3DS in the US doesn't always make sense, especially if you're kind of worried about conversion rate and payment success rate. But yeah, is this kind of reflective of South Africa, or how does it look in these two graphs?
Yeah, South Africa kind of is closer to the UK. Like transactions are more likely to be authenticated when approved when you're attaching authentication data to it, like 3DS. They're not seen as like risky. As kind of I read the US Stripe document, like how I read that is that issuers are acknowledging payments that have had where a merchant has chosen to initiate 3DS as more likely to be a risky transaction and declining them at a higher rate. Whereas if you didn't even try to do 3DS, they would. That sounds super interesting. But in South Africa, definitely conversion is higher when 3DS is used.
Yeah, and I mean, when it's not mandated, it totally makes sense because there's a reason that merchants are trying to offload the chargeback liability, and it's somewhat data driven. But I think over time, the idea is that in kind of lesser served 3DS markets, the graph does tend to resemble the kind of top line here with the UK and also the EU. But what a lot of merchants do in the meantime is they basically stack a bunch of kind of fraud tools on top of each other. So they do things like standard fraud detection. They use that to inform whether 3D-Secure should be informed or should be applied. And then decisioning engines to make sure that 3D-Secure is only implemented where it's kind of absolutely mandated or required. And in that case, you're kind of minimizing 3D-Secure where it's not needed. And as a result, you kind of get the authorization advantages, but you're also kind of getting rid of a bunch of the kind of high risk authentications or payment authorizations that are going to be pretty costly to the business. So this is where I think all of the interesting tidbits of the webinar are going to be a bunch of kind of tactical tips about how you can implement 3DS correctly, and whether you're implementing it yourself, working with a PSP, just how you can optimize 3DS. You're kind of striking the right balance between authentication success rate, authorization success rate, and user friction as well. So the easiest way to get started using 3D-Secure is normally through your PSP. If you're using someone like Stitch or maybe Adyen, Stripe, or Checkout, normally this is as easy as flicking a switch, or in some cases you don't even need to flick a switch because they're just looking at the card or the merchant and enforcing 3D-Secure when it's required. One of the problems with this is if you have a multi-PSP setup, then each of the 3DS implementations need to be handled separately. So some PSPs might implement a redirect flow, some might implement a pop-up flow, or some might use an iframe. So they can get quite messy quite quickly, especially if you're using 3, 4, or 5 different payment gateways to cover kind of all the geographies that you're looking to do business in. The other is mobile wallets. So we spoke about this, but if you're using Apple Pay, you get 3DS-ish. It's not technically 3DS, but it amounts to the same thing out of the box, including the liability shift, except in obviously the circumstances that Josh mentioned in geographies like South Africa and maybe anything outside of North America and the EU. There's a lot more kind of asterisks around this as well. The third is one that I definitely wouldn't recommend, which is kind of getting licensed yourself as a 3D-Secure server, building a direct integration with the card networks. So that involves firstly being PCI DSS compliant, as well as PCI 3DS compliant, which is a major kind of uplift. Then you get approved by EMVCo after you've kind of sent off to a testing lab to get your implementation certified. You then go directly to each of the card networks. They have their own certification processes. And then once that's done, you do get full control over every aspect of the 3DS lifecycle, but it's a major operational lift. And taking it from someone who's kind of been through this process before, it's definitely not something I'd recommend unless payment processing is kind of a core competency, and there's definitely a clear ROI there. The fourth option is using a 3D-Secure server or 3D-Secure API provider. This is obviously somewhat self-interested here, as this is what we provide, but we handle things like merchant onboarding, 3D-Secure integrations for web and mobile, and then kind of give you direct insights into exactly why a 3DS authentication failed, or how you can optimize your 3DS going forward. So you can use them across any PSPs. You get one unified 3DS flow for every single PSP, so you implement it once, and then you just pass the data to whatever payment gateway you're using under the hood. So it saves kind of months of negotiations, separate integration projects for each of the PSPs, and you end up with a lot more control and flexibility over when you're performing 3DS, and also how you can optimize 3DS by passing additional data to the authentication requests, and so on. Josh, this is something I'm particularly interested to hear from you from. It's implementing 3D-Secure for large merchants is very, very different to kind of a small business that doesn't really care about kind of a 1 or 2% swing in authentication rates. But we kind of spoke a bit about how under the hood, there's thousands of issuing banks that are part of the 3DS system, for lack of a better word. So things do go wrong. I'm curious, what are big merchants doing? And I guess what are Stitch doing on the 3DS side to make sure that authentication works 100% of the time, every time, where possible?
Yeah. So maybe kind of just to start off, like looking at our data when we look at conversion rates, which we're looking at, daily, the highest conversion rate, the highest rejection rate on transactions is always due to 3DS failures. So obviously you'll have some legitimate declines, like 3DS decline. That could be a legitimate, like fraudulent transaction, and the user declined the authentication. But the majority of the time, it's like timeouts or 3DS not completed. And for anyone who's gone through like a 3DS flow, it can be extremely frustrating. You're on your computer, you're making a payment, and now you have to go look for your phone to kind of like authenticate or get the OTP to put into the browser, and you don't know where your phone is. It's kind of like an ache for many merchants and for many users. There's also a lot of downtime with what I would call the MPIs, which is kind of the interface that merchants or PSPs talk to initiate the 3DS, which then talks to the directory server, which then talks to the issuers. In South Africa, for example, anyone in this market knows that BankServe MPI goes down very often. And Stitch really places a lot of focus on uptime for our merchants. So one of the things we've done there is we have multiple integrations with multiple MPIs and have dynamic routing. So we're constantly checking that a specific MPI is up. If it's up, we process through that MPI. If it's down, we process through another MPI. That's partly where our relationship with Evervault is. So kind of like making sure that we can always process through the authentication is super important. I think kind of another point on that is different MPIs have different conversion rates and perform differently. They have different kind of uptimes. It's quite a complicated integration, like you mentioned, and there's different performance, and sometimes there's different performance for different issued cards. So you might find that some issued cards perform better on one MPI and other issued cards work better on another MPI. So, kind of Stitch figuring that out and kind of routing transactions dynamically through those MPIs is really important for us. Another kind of like huge drop off in 3DS authentication is kind of when you showed that video, what was actually happens in the front end. So the users on the site making a payment, that challenge flow pops up, which is owned by the issuer, that ACS in that free domain environment. And when the challenge is complete, what's happening on the front end is a post message is being sent to the browser on the payment page with all that 3DS data, like the ECI flag and the CAB data. Now, if you think about an environment where there are network failures or internet drops, or someone runs out of data while they're making a payment, obviously that post message on the front end doesn't work, and that's interrupted, and you can't process the transaction. So this was a huge problem in South Africa for a while. Users closing their browser when they go to their banking app to authenticate the payment, and you can't keep context of that transaction. So something Stitch did in this environment was ensure that we have back-end systems that are constantly listening for the result of those authentications or those challenge flows. So even when that front-end process is interrupted, we can still catch the response from that ACS and continue processing the transaction. Another thing that's super important at scale is, by definition, 3DS introduced friction. It's what it's designed to do. And there's this kind of constant way off or way up between friction and risk. So something Stitch really places a lot of focus on is deciding when to do 3DS for large merchants. Kind of risk scoring a transaction and making a suggestion to the merchant based on all the payments that we've processed for multiple merchants in multiple industries, whether or not they should do 3DS in that transaction. Now, obviously, if the transaction has a high risk score, we would suggest that 3DS is done. But if it's the same user making the same payment they make every month for the 12th time that year, we might say, don't do 3DS on this transaction. So that's really kind of like an important distinction and something that a PSP like Stitch can offer enterprise merchants. Obviously, some enterprise merchants also have their own risk engines running inside their system. So Stitch has really placed emphasis on being able to consume those risk scores from our merchants and then make decisions on whether or not to do 3DS. If they tell us to or they tell us not to. And then lastly, you kind of mentioned like 3DS costs money. So kind of like part of that decisioning around whether to do 3DS or not also has a cost implication. You kind of want to minimize costs. There's no need to do 3DS on transactions that are super low risk and pay for that. So yeah, optimizing costs. So I think kind of like collectively, what Stitch is doing for these enterprise merchants in the market is kind of like packaging this all into one API, doing this routing, this dynamic decision making, this optimization in the background for merchants. And yeah, we are seeing the benefits of higher conversion.
Cool. I guess distilling all this down into some kind of tactical bullet points as well. We've touched on bits of this throughout the entire presentation, but if there's kind of 6 takeaways, there's 2 slides here with 3 points each. The first is that conversion rates in the EU generally aren't a massive problem because cardholders are used to 3DS. But in regions like the US, when transaction or authentications are frictionlessly successful, that's no problem. But when challenges are presented, sometimes conversions can drop, or fall from the roof. It's it can be a pretty bad outcome, especially for merchants that are performing 3DS when it's a low value or low risk transaction. The second is kind of an implementation detail, and this is something that we come across a lot, but 3DS requires you to pass information about the acquirer bin and merchant ID as part of every 3DS authentication. One interesting tidbit is that the acquirer bin and merchant ID that you use for 3D-Secure doesn't need to be the same one that's being used for authorization. Sometimes you might see an impact on authorization success rate if there's a mismatch in merchant category codes or something similar. But generally speaking, the acquirer bin and merchant ID is just used for kind of cost or expense reconciliation on the card network side. So especially for PayFacs or PSPs, in a lot of cases, they're actually just using an umbrella acquirer bin and merchant ID that is used for all of their sub-merchants. So from an implementation perspective, if you're a PSP, it saves you a lot of work having to go off and get acquirer bins and merchant IDs for all of the merchants that you work with. You can just have a single implementation, and the same is true for kind of multi-merchant setups. If it's a global business with a bunch of subsidiaries, you can just use a single acquirer bin and MID for all of those authentications. We touched on this a lot in the kind of the Stripe graph that we ran through, but although 3DS reduces fraud and chargeback rates, it also decreases authorization rates when frictionless is performed, mostly because 3D-Secure is kind of a fraud signal in and of itself. There's a reason that merchants are requesting it. So in some geographies, issuers are more inclined to reject an authorization just because 3DS has been performed. From an implementation perspective, small details about how the challenge flow is presented, how the spinner for the card network logo or whatever is presented can have a massive impact on conversion rates, sometimes even an order of magnitude difference. If a user has to open a new tab or new window or whatever to perform 3D-Secure, in a lot of cases, especially on mobile, that can massively impact kind of lost purchases effectively because users don't really know what to do. So as a general recommendation, I would always recommend using kind of a modal pop-up or ideally an iframe within the payment page so that the user doesn't have to be redirected and 3D-Secure can still be implemented kind of compliantly and within the scope of the spec. And then network tokens. So we did a webinar about a month ago talking about network tokens, which are kind of talk of the town in payments at the moment. But network tokens are fully compatible with 3D-Secure. So you can run a 3DS authentication for a network token. It works pretty much the same way. With one caveat being network tokens in most cases also give you a liability shift in the same way that 3D-Secure does. So the UCAF cryptogram value that you get from 3D-Secure, you get a very similar value for network tokens, which shifts the liability for transactions that are performed using network tokens as well. So that's why the secure credential framework fee from the card networks kind of applies to either network tokens or 3DS. From an issuer's perspective, they kind of treat the risk as approximately similar. And then finally, the reality of 3D-Secure is there's thousands of counterparties in every single transaction or across all transactions. So there's going to be errors. 3DS sessions will fail for all sorts of reasons. Banks go down, card networks go down. different banks process different values in different ways. So you're going to have errors. Some single-digit percentage of all 3DS authentications are going to fail. So the most important thing is just having really good observability infrastructure. So you can dig into an individual 3DS session, see why it failed, and then kind of prevent that going forward, either by collecting more data from the user or passing more details or better structured details as part of the authentication request. Sometimes some of the errors are extremely mysterious. So things like transient system error, whatever that means, is actually a spec compliant error code that you can get back from banks. So yeah, this is something that you're just going to have to deal with, especially if you're handling 3DS yourself. We're kind of coming up on time now, so I think we're going to run through some of the questions. There's been quite a lot, so unfortunately I don't think we'll get to all of them. But the first question I kind of wanted to run through was from Daniel about, can you request a challenge from the issuer? I'll kind of answer a slightly broader question, which is, can you ask the issuer to kind of treat the authentication in a certain way? So the short answer is yes, you can request a challenge. You can also request frictionless for various different reasons. So there's things like transaction risk analysis, which is basically you've done your own fraud modeling. This transaction is below a fraud threshold, so you can request the frictionless pathway. The biggest problem is that you don't know whether the issuing bank is going to respect that request. So in most cases they will, but you never get a guarantee. You can't kind of force the bank to give you a frictionless flow. What you can do is, if the authentication gets challenged, even if you request frictionless, you can just kind of fail the session or fail the 3DS authentication and process the payment without 3DS. But the banks have no requirement to respect your request, which is sort of, it makes sense, but it is kind of a reality. Another question is, if the merchant is excluded from the shift, can 3DS, or how can 3DS be leveraged in defense of the charge? Does it improve chances to prevail? Josh, I'm curious if you have a better answer for this than me. I think short answer is probably it's a good data point, but it definitely gives you no guarantees.
Yeah, for sure. It doesn't give you a guarantee. Essentially, like when a merchant receives a chargeback for a transaction that had 3DS completed on it, a PSP like Stitch would generate something called a 3DS report, where we would kind of give all the data to prove that 3DS did occur. One of those fields is the ECI flag to show that it was successfully authenticated. That data is attached to the card payment for authorization. And you kind of connect those two things and present that to the acquiring bank as a challenge to the chargeback to prove that 3DS did happen. When you do that, it is extremely more likely that you win the chargeback and you are not liable. Obviously, it also depends on like the reason for the chargeback. Was it because goods were delivered? In that case, you would attach additional information to that challenge, like proof of receipt or something like that. If I understood the question correctly, that's the answer. If I missed something.
Yep, I think that'll make sense to me anyway. Another question on, do you recommend doing 3D-Secure at the payment method level instead of the payment level? It's an interesting question because, so going back to the first slide where I ran through how authentication and authorization are two distinct steps. With 3D-Secure, you can do what's called NPA, non-payment authentication, where you can authenticate a cardholder even if you're not trying to process a transaction. So this would normally be when you're adding a card to a wallet for future payments or something similar. So it is useful as an authentication tool. The problem with doing it at the payment method level is that any subsequent payment authorizations that you're doing with that card on file don't have the 3DS authentication bound to that payment, so you don't get the liability shift. There's nothing stopping you doing it. It definitely reduces risk, but you don't get the kind of chargeback liability shift guarantees. What you can do is when you're requesting or making a payment subsequently, you can pass a reference to the initial non-payment authentication when the card was added to kind of improve the likelihood of getting a merchant-initiated authentication success. But again, kind of no guarantees. And I think doing it at the payment level plus at the payment method level is probably the best from a fraud and conversion rate standpoint, assuming that it's something that a user's only doing once or every time they add their card to a service.
Yeah, I think it also kind of like matters like what your intention is as the merchant there. Like if you're using a wallet and you have to use biometrics to get into that wallet to then use the payment method that you've loaded into that wallet, for example, you kind of have to authenticate yourself to log into like a secure profile site when you're going to buy things. The merchant and their PSP might make the decision that 3DS isn't required on those payments because of the fraud rules that they run. That can result in like a low risk transaction.
Yeah. When there's a server failure, is there some sort of 3DS server to keep things up and running? So the thing with 3DS failures is that they can fail at any step along the authentication. So in a lot of cases, there's kind of small local outages where an individual bank is down or something similar. Honestly, there's nothing you can really do for those kind of errors because the bank is down. They're not going to authenticate the payment. What does happen though when the bank is down is that the directory servers or the card networks do what's called stand-in authentication. So if a bank can't respond quickly enough or the bank is down or whatever, Visa or MasterCard or whoever will just step in. They'll authenticate the transaction on your behalf and you still get the liability shift even though the bank didn't approve it. So it is kind of within the bank's interest to make sure that the services are up. When the 3DS server goes down, so the kind of merchant plugin MPI, yes, that's sort of something that you should definitely have retries for, kind of like Josh was talking about with multiple MPI providers. So maybe you use a standalone 3DS server, but you fall back to the PSPs, or you just work with 2 or 3 independent 3DS servers. That'll resolve a lot of those issues. But even the card networks themselves frequently go down. So, MasterCard and Visa have had multi-hour directory server outages, which again, there's not much you can do there because then you neither get stand-in authentication nor do you get kind of a proper authentication from the bank. So it's a big problem.
Maybe something that's not super clear, Shane, is that these directory servers are owned by Visa and MasterCard and American Express and Diners. And what they are when you're authorizing a payment or authenticating a payment, they're essentially acting as like the quarterback for the MPI to tell the MPI which issuer that card needs to go to for authorization. So you'll notice like on your card, if you have a Visa card, it starts with a 4. If it's a MasterCard, it starts with a 5. And, that would be the first decision, is this Visa or MasterCard? And then the next 5 digits of your card number tell you which issue it is, what kind of card it is, the credit, debit, that kind of information. So the directory servers are the networks, they're owned by the networks, and they are kind of like pushing cards to different issuers. So if that goes down, kind of the whole process stops.
Yeah, and you can't pick and choose your own. Yeah, you can't choose your own directory service or directory server provider. There are companies that provide directory server software, but that generally only applies if you're actually a card network looking to build like a local rail or something, or maybe some in-house 3DS-like flow. So yeah, fortunately or unfortunately, you're stuck with what you get from the networks. I think we probably have time for one more question, but I'll take this one, which is there a possibility to perform 3DS with liability shift via API only? Short answer is yes, kind of. So in the 3RI or merchant initiated transaction flow that I ran through a few slides ago, if it is a legitimate merchant initiated transaction, you can request a 3D-Secure authentication. Technically speaking, there is nothing blocking you from doing a merchant initiated transaction, even if the user clicks a buy button or something similar. It would be against the rules that are enforced by your acquirers or the card networks. But in the case of merchant initiated transaction, there's no fingerprinting gathered from the user, and all the context is just provided by the merchant. So it's only really designed for recurring payments, but technically speaking, you definitely could. I think that kind of brings us to a conclusion. Thank you very much, Josh, for joining us. If people want to get in touch with you, how do they get in contact? And if you want to plug Stitch, feel free to.
Yeah, I mean, you can just tag me on LinkedIn or go to our Stitch website. We've got a great sales page there. Kind of goes to Thea, who we work with every day. It's not like a robot on the other side. Yeah.
Cool. Yeah, thank you very much. And the recording and slides for this will be available afterwards. We'll follow up over email as well. And feel free to share the link or slides with whoever you'd like to. I'm Shane at Evervault.com. Similar to Josh, feel free to just tag me on LinkedIn or get in contact with Evervault directly, and a real human will also reach out to you. So thank you, everybody, and enjoy the rest of your day.